Welcome to the latest Savings Guru podcast. I'm delighted to be joined today by Clare Framrose from Atom Bank. Clare's the head of proposition design and savings. Clare, welcome to the show.
Thank you. It's great to be here. Thanks for having me.
It's great to have you on. I'm looking forward to this one and talking to you more about Atom and what you've been up to. I guess for a starting point, it'd be great to go through a bit of your background. I think you were one of the first employees to join Atom. Can you tell us a bit more about kind of your background and how you came to get involved so early with them?
Yeah, sure. So I've worked in various other sectors, but I did join Atom from Virgin Money, so I've got some background in financial services. And I joined the business in December 2014. So it was very early on. There were around 30 employees when I came in. And it was great. There was such a buzz about the fact that we were building a bank from scratch. There was this kind of race in the market, I suppose, to be the first of the new challengers to secure a license. And of course, we did that. And I suppose thinking about how things are now in comparison with that, well, instead of 30, there are now around 430 of us.
Wow.
So yeah, quite a period of growth. But what stayed at Atom is the energy, the real desire to innovate and collaborate. But actually, the one key thing that attracted me to Atom and is still very much dominant is the fact that the customer's genuinely at the heart of everything that we do.
It's really interesting you kind of talk there about the change in employee numbers and you mentioned there about having the customer. How do you achieve that when you grow so sharply? How do you get everyone bought into that ethos? Because it's quite easy when you've got 30 people to communicate that. But when you start ramping up those kind of numbers and obviously you're still growing, how do you kind of keep that focus?
It doesn't just all happen in one go. So we didn't go from 30 to 430 in one jump. That would have been really challenging. It kind of creeps up on you, I suppose. So you go from 30 to 50 and then suddenly it's 120. And at every stage, I think what we've done is check in very much from a people experience side of things. And we have a really great people experience team that help to bring us together culturally and make sure that we all have similar values and similar focus. And I suppose part of that comes from the way that we recruit people into Atom as well. So, of course, it's important to make sure that people are technically able to do their jobs. But we also focus on how people work and their approach and their attitude so that we know we're bringing like-minded people into the business. And it doesn't feel like 430 people. It still feels, it's a bit of a cliche, but like a small family where everybody's pulling together to do the best for the customer.
That's really hard to achieve. So that's impressive that you'll continue to do that. I mean, you've taken quite a different approach from day one, haven't you? I mean, you launched an app-only savings proposition, in 2016 when the market was kind of renowned for being an older demographic, and you had will.i.am as a strategic advisor as well at the time. So very kind of different approach to tackling the market. What was kind of behind that? Why did you go down those kind of directions?
Well, I think it's important to kind of acknowledge that we set out a very clear strategic business model early on, and we've kind of stayed true to that. So we wanted to establish a really strong balance sheet and a strong reputation for being a savings and lending bank. The first product that we launched was Fixed Saver. But interestingly, we've always thought that age isn't as relevant as mindset. And what we've seen in response to that is a hugely positive response from a range of demographic groups. I mean, we've had customers aged from 18 through to 100 using the app. So yes, there's that older group, but actually tech has become so widespread and so accessible that I think as long as we make sure that the digital experience is straightforward and that people can use it, they will find us and they will use it. And that's certainly evident in the range of demographics that we've seen. Now, will.i.am's an interesting question because he was brought in to provide our board with a different perspective. So, of course, he doesn't have a background in financial services, but what he does have, which a number of people don't realise, is various interests in tech innovation. So one of the things that he did was talk with us and provoke our thinking about the future of digital, changing technology. We've had some really great debates there about biometrics and data bias. And he just brought that different, fresh perspective that helped to provoke some of that thinking amongst our board and the wider business.
I think you're right. I hadn't appreciated how heavily invested in that sector he was until he joined you, and then kind of you sort of thought initially, well, that's an interesting move. What's behind that? And you kind of look into him a bit more about what he's done, and he has got he's clearly been an incredibly successful individual. He's got a huge number of investments and a real interest and passion in that area, hasn't he?
It's interesting because when you talk about will.i.am, most people think about the music side of things, of course, especially since he's been on The Voice in the last few years. But he does have a really interesting perspective, and he came from a very underprivileged background. So he is very aware of the importance of financial education, especially for young people. And that's something that we talked with him about, as well as the kind of tech innovation side of things.
He did a great show on the FinTech Insiders podcast as well. That was interesting to hear.
Yeah, I was on that with him.
Yes, you were. Yeah. That's right, you were. That was a really interesting listen. Finding out more about that side. I'm sure that there was also a lovely halo effect off of him because he is such a well-known personality in other areas of his life. You know, the music side and the voice and TV. One of the things that's a big thing for new savers is having the FSCS protection. It's something that's important when you're a new bank. It provides some reassurance, but it's not the only thing that savers look at. It's not, it's not simply a case of if you've got that, everything else is fine. Savers look beyond that at other things as well. How have you gone about gaining that trust in the savings market?
It's interesting, isn't it? Because I think you're right. The FSCS is almost a proxy for trust. It gives a bit of a safety net, but nobody wants to fall back on it. So how do you establish trust? Trust has to be earned, doesn't it? Whether that's with a business that you're going to as a consumer or just in your everyday relationships. So I do think that there's something in that old mantra that actions speak louder than words. I think that's really relevant here. We have, as I've said, we genuinely put customers at the heart of our proposition design. We listen to them. We adapt our approach to meet their needs. We are very honest and transparent with our customers. And actually, I think the fact that we're willing to admit it when we make a mistake and we're constantly striving to be better means that people connect with us in that way. One of my reflections over the years has been that actually it's really interesting that although we're an app-only bank, we're quite often seen to demonstrate a greater level of humanity and kindness than some of the incumbents who have branches and contact centres and face-to-face contact with their customers. And I think that's because we set out very early on with some clear principles to be honest and transparent and genuine with customers. And we've stuck to that.
I think you can see that looking at things like your Trustpilot ranking and your some of the feedback you get there. That comes through. I did a piece of research recently on customer services rankings from a savings perspective, and I was pleasantly surprised how highly you scored there. I think when you're working with new tech, sometimes it's actually difficult to get used to the tech, and rather than the problems with the tech or the journey, etc. itself. But you've clearly nailed that looking at your high scores. You've obviously made a number of iterations to the app. You don't put an app out there and then leave it and off you go. What kind of feedback have you had from customers that's kind of made you decide to continue to upgrade and to change that? Because having gone through your journey in the early days to having done it more recently, there's significant changes and improvements. It's a much more pleasant experience to go through the app now than it was a lot harder, in my opinion, in the early days. What feedback have you had? How have you what's been your approach to taking that on board and deciding what's valid and integrating and what's not?
It's a really good question, James, and It's about the things that we want to do, but more importantly, the things that customers want from us and tell us about. Customers are, as you know, customers are always very interested in sharing feedback and telling us the things that work for them and the things that don't work for them. Now, of course, we can't put out a new app release every time somebody wants us to change one little thing, but we spend a lot of time analysing customer feedback, customer verbatims. We have an existing customer group that we test ideas with and talk to. And we try and run as much user testing as we can before we ever launch anything in the app. Of course, tech change also influences app releases. So we know that there are some really important things to customers. Things like security and privacy are becoming increasingly more dominant in customers' minds. So we need to make sure that the app is always up to scratch with that. Now, that might not always be visible to customers, but those releases are really important because they underpin everything that we do. But then listening to customers and what works for them and what doesn't is really important. Those feedback loops work to our advantage because they make the journeys better and slicker and easier for customers, and it means that we meet their expectations better. So one example of that was, as we said, the first product we launched was our Fix Saver. And subsequent to that, of course, we launched a maturity process, which was in the app. So savings customers reaching maturity can go into the app and give us their instructions in just a few minutes. And we had a really positive response to that. But we also had some suggestions on how it could be easier and more straightforward. So we took those and we looked at the emerging themes that were coming through and we adjusted the journey. And as a result of that, we've had really positive response from customers saying, oh, this is so much better than last time I did it. And that's a process that we actively involve. You hear people in tech talking about an agile approach all the time. Well, this is agile in real life because this is about building something and then iterating it based on what customers tell you and what you see yourself in terms of your interactions with them.
Do you think there's a kind of almost like a forgiveness in the early days from people if you engage with them, that they kind of feel part of the journey, so they'll maybe forgive some of the things not being quite there because that they can see that you're trying and you're listening and you're evolving, and that things are changing for the better as a result because they're engaged?
Yeah, absolutely. And not even just in the early days, actually. So I think that customers who are quite innovative and forward looking, those who kind of jumped into the fintechs quite early on as customers, were very open to that and very flexible and adaptable, especially, as you say, if they could see that they've told you something and you've adapted to it. But even now, the fact that we've established such strong trust and engagement with our customers means that even now when we make mistakes, they're more forgiving. Part of that is because we turn around and say, sorry, we messed up, we're fixing it. Whereas, some other businesses might choose to say, oh, no, 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 nothing to see here. But I think it's also because customers believe that we are genuinely trying to do the best for them. So, yeah, maybe more forgiving, but maybe just they see that humanity and they're prepared to connect with us on that level.
Your approach has been really successful. Obviously, you've announced some pretty significant milestones recently, primarily 1 billion of savings on your instant saver account, and that's been achieved in a really short period of time. Is it down to that kind of customer approach and embracing the customer that you've achieved that, or are there other things as well that have contributed to that?
Well, I'd be lying if I didn't say that offering competitive rates is a part of it, because of course that influences customer decision making. But I do think it's all the things we've just talked about. It's about the reputation that we've established. It's about the fact that our products do what they say they're going to do. So one of the most common pieces of feedback we've received since we launched that product last September is we've called it the instant saver, and it is instant. And that's what customers tell us. So they like the fact that if they make a transfer in or out of it, it is there straight away. They don't have to wait till the next day. Instant means instant. And this is what I mean about the transparency. It's about trying to keep our promises and do what we say we're going to do so that we meet or exceed customers' expectations.
I think that's a really interesting point on the instant bit there. I've been involved with clients where it isn't quite instant. It's a timed process and payments to run at certain points in the day, and sometimes explain to people that actually that's not enough for customers. That the sums of money that are involved here are large. People don't like it disappearing out of one account and not being able to see it in the other account in a short period of time. They'll give you a little while, but they expect it to be there pretty quickly in this day and age and to be able to
Yeah.
see it. And if they can't, they will phone you for reassurance that it hasn't gone astray in the ether.
Yeah, I agree with you. And there's this, we are in, I suppose, this always on culture where everybody expects everything instantly. Even if it takes 2 seconds to load a web page, you start getting annoyed with it. So,
Yeah.
but then you know what? Don't call it instant if it's not instant. And I think that a lot of the incumbents are starting to recognise that, and they're adapting their approach on that basis. Because if you call it easy access and you give easy access, that's one thing. But if you call it instant, you have to make sure it is instant. Language matters, and it influences people's responses to you. So we think very carefully about all of these things.
By my maths now, you must be pushing towards about 3 billion in total savings. Just kind of looking at kind of what you've done and previous announcements of where you're at. What's next then for you and Atom? What have you got in the pipeline in terms of changes to how you do business or new products coming down the line that you can share with us?
We're very focused on the lending side of the business. We've been involved in some of the government-backed lending schemes for business lending customers in the last year or so. And we're still very focused on mortgage customers and trying to give them a really good deal. From the savings side, though, innovation from a savings perspective for Atom isn't about adding complexity to products or adding features to accounts just for the sake of it. It's about the experience that we give our customers. It's about making it as smooth as possible so that they don't have to ring the contact center. So we spend a lot of time thinking and talking about how we can enhance that experience. We've got a couple of things in the pipeline that I can't really talk about right now or share with you, but watch this space, because hopefully in the next few months you'll see some new things starting to come out in the app, some new features that you can find some benefits from.
Yeah. Okay. Great. I should look forward to seeing what you've got in store. It is quite hard to differentiate in savings. A few have had a go, not many. But actually, if you're not going to differentiate, then actually it is about making it as simple as possible and making it as easy to do business as possible. And I think you can see a lot of that in the providers that are more successful. There's generally been a focus on taking away pain points for customers rather than necessarily trying to do something that looks really snazzy or super duper, but actually just focus on getting the basics right and doing them really, really well.
Mm, yeah, I agree. At their heart, savings products are really pretty straightforward. And I think over time, some people in the financial services industry in the past have had ideas that they think customers will like, but they didn't necessarily ask the customers if they wanted them. And
Yeah.
so sometimes products evolve and become bigger than they need to. And actually, what customers want in this space is something that's really straightforward, easy to use, easy to understand. They don't want to have to give a lot of thought to this stuff. They want to be able to make clean and straightforward choices. So, as you say, making products as straightforward and simple as possible and enhancing the way customers can interact with them through the experience is really at the heart of what we're trying to do.
We should talk about the new entrants to the market as well. You mentioned that Atom are one of the earlier ones, but we've seen quite a number of them come into the space since it was made a lot easier after the global financial crisis. And I kind of say that sometimes slightly tongue in cheek as someone who's been through the process with supporting a number of banks. I don't think anyone ever would call it easy, but easier than by historical standards. We saw Crew got authorised in the last week or so. I think that's the 33rd new entrant now that's come into the market since the changes were made. What impact does that have on what Atom does? Do you kind of follow that? Are you looking at who's coming and what they're bringing to the market, or are you focused on what you're doing and just not pay too much attention to what else is going on?
Oh, no, of course, we always look at what's happening in the wider market. Competition is one of the key influences in what you do. You need to make sure that you're pegging with your competitors from a hygiene factor level. So customers' expectations shift, and we've certainly seen that in the last few years when it comes to both savings accounts and app-based banking in general. But my opinion is that a competitive market is a healthy market. It means that there's room there, and it gives customers more choice. Now, the key there is to make sure that those choices are straightforward for them and they're made easy. So adding complexity through choice is something that we across the industry need to try and avoid. But adding a good, healthy competition can only be a good thing for customers. Of course, it has an impact on us because competition sharpens your instincts, I suppose, doesn't it? And so it has meant that we have really focused on holding firm to the principles that we've got. And that goes back to all the stuff we've already talked about. So the way we design, the way we launch, the way we iterate our savings products and our experiences to make sure that they are fresh and up to date and they're always easy for customers to navigate so that those choices are straightforward for them and they can see their way through that competitive market. And if we're right for them, they will choose us.
One of the criticisms that's been levelled at the new entrant banks is that they haven't significantly dented the market share of the incumbents. They're still not dissimilar to before the influx of new banks. Why do you think that might be, and do you think that's going to change?
Well, I think it's probably fair to reflect on the fact that customers are starting to choose more than one provider for savings. So in the past, when there was more limited choice, they might just have said, oh, look, I've got my current account with Bank X. I'll just open up a savings account and have everything in one place. Now, I think a lot of consumers continue to keep those types of savings accounts open, even, let's say, when they're not getting particularly good interest rates on them. But I think a lot of the time they also go and look further afield, and they might actually choose to spread their savings across a number of providers. And I think that that can only be good for customers and good for banks like us. I think what we need to do is encourage customers to take a more active role in assessing the way in which they look at their interest rates and whether they really are getting the most for their money. And I think that there's a real opportunity across the industry to look at that. But I do think that even if those new banks haven't taken the market share, I think we've made them sharpen their perspective. So even before the COVID pandemic started driving increasing numbers of customers to digital banking, and we know it's done that, but even before that, the quality of app-based banking improved significantly. And I believe that that's because the incumbents had to keep up with the higher standards that were being set by people like Atom. We were coming in and showing customers what was possible. And as a result of that, customers' expectations increased and they demanded more from the incumbents. Now, that is a threat to those banks. So they have to keep pace and they've had to invest significant sums of money in keeping their apps up to scratch so that they're giving customers what they want and need for fear of losing them. So I think there are different perspectives on this, and it's quite a complex topic. It's not all just about market share. It's about changing the face of the market and changing the thinking within financial services, and hopefully, as we go forward, changing the way that customers are able to interact and engage with some of the decisions that they're making, so that they can start being more proactive and, I suppose, generating better outcomes for themselves in the most easy way.
Those are really interesting points. I think it can be easy to look at statistics and say what's really changed. One of the criticism levelled at Monzo is you've got all those customers but not really making money out of them. So almost like, what's the point? But I think you're right. I think a lot of the new entrants have done a huge amount to actually improve what's been on offer from the incumbents. And I'm not sure they would have necessarily innovated themselves without that.
I think they all had digital programs underway,
Yes.
5 years ago. That's 8 years ago. They were all starting to look at this. They were definitely building online journeys. But the change in app-based banking has really moved at pace. And if you think back, I don't know, maybe 3 years, and you think about what you might have got on your current account with Santander or Barclays or HSBC or whoever it is that you bank with, and then someone like Monzo's come along and said to customers, this is what you should be getting in an app. Well, those customers are then going back and saying, hang on a minute, hey, big bank, why can't I add a new payee in my app? I should be able to do that. You've got security in place. Why can't I do that? Why are you forcing me to go online to do it? Or worse still, come into a branch to do some of these things. So they have really shifted their perspective on that. And I think they've all increased their commitment, the resource, and the budget that they've put behind the app development. And that in itself is a good thing. You know, that's a success for the challenger banks. We came in to disrupt the market, and we've done that.
I think it's going to be a fascinating one to see how it plays out. I think another thing that I always kind of say to people is you have to remember that some of the incumbents that are there have had over 300 years of building to this. You can't expect companies that have been around for less than 5 years to undo all of that in an instant. It will take time, and it will be an evolution rather than a revolution.
Yeah, I agree. We're just little babies, aren't we?
Well, we are, aren't you? If you think it in that sense, and I think this is in the savings market. This is kind of quite interesting. If you look at the kind of growth of the savings market in general, actually, most of the new entrants club together, actually, their appetite for new savings currently is less than that growth in the market. So actually, structurally, it makes it quite difficult for them to take market share because they don't need it. So I think that's something that will change as the industry grows, if you like. As we've talked about some of your milestones. As you push through from 3 billion to 5 billion to 10 billion maybe and onwards, then there'll be a greater appetite there, and you'll be able to take more, as will each and every one of the new participants, hopefully too. So um, I think there's more to come. Yeah, I think 2021, judging it is hard to call. I think it will look very different by say 2030, when most of those have had 15 years, maybe 20 years in the case of the first ones in. Uh, it will be fascinating to look back then and see where it's gone.
Yeah, sure. And we shouldn't forget that right now we are in an unprecedented situation. We're in a position where the pandemic last year had quite severe impacts at both ends of the spectrum. So people who could afford to save were saving more, and people who couldn't afford to save had even less money. So we've seen a bit of a dichotomy emerge in the market, and it will be interesting to see how that settles as we come through this and move forward. But I suppose the key here is to make sure that we're trying to encourage savings habits amongst those who don't have a lot to save and who need help with that, whilst also offering really smooth and slick processes to those people who are more affluent and can afford to put a little bit more away, so that they feel that their money's working really hard for them.
You're absolutely right. The pandemic's been really polarizing. There, people talk about the kind of accidental savers and the huge impact that's had, but it's been polarized with people at the other end going completely the other way, and that's having a significant impact on the market at the moment, as we've seen with the sort of rate volatility that we're going through currently. We've
Mhm.
talked a huge amount about the changes that have come in. The market's changed incredibly in the past decade. Where do you see things going in the next 3 years? If you were to get your crystal ball out, what do you think we'll see coming down the track in the future?
Well, I suspect we'll see more competitors joining the market. We're already seeing some signals of people saying, oh, yeah, we might like to get into the UK savings market. It would be interesting to see whether some of the more marketplace based aggregator type opportunities really connect with customers, because I don't think they've got much of a foothold yet. So I think it'll be interesting to see how they evolve. But actually, I do think that the increasing competitiveness is a really important point. And it goes back to what I said earlier, which is I just want things to continue to get better for customers. That's why I came to Atom. That's why I'm really proud of the things that I've achieved here, because I think there's a danger that as more people come into the market, it could become even more rate led than it has been in the past. And of course, rate's really important, but it's not the only factor that features in customers' decision making. So I just hope that people don't lose sight of the fact that they're doing this for customers. And yes, of course, you're running a business at the end of the day and it has to be profitable, but it's important to put the customer at the heart of that and make sure that you do build that trust and engagement and give people what they need and what they want so that they can save in a really healthy way for their futures.
I agree. I think we'll see more innovation there to focus on customers to help savers, maximise their money. And I think there will be more of a focus on that going forward. See some of the things seeing that are working towards coming to the market are definitely coming at it from that perspective.
Mm.
We're kind of coming to the end, and there's one question that I ask every guest on here, which is: you've got a free pass. You're Chancellor of the Exchequer for the day. What's the one change, sat in Rishi's shoes, that you'd make to benefit savers?
Well, quite honestly, if I was in his shoes, I would probably be doing something else. But let's not get too political. Thinking about benefiting savers, though, it's interesting. We've just been talking about the polarizing impact of COVID and how particularly those in underprivileged areas have really struggled with this, and they haven't seen this boom that a lot of more affluent people have been benefiting from. And as I was thinking about this, I was just considering what's worked well in the past and what I think is missing. And as I was casting around, Whitney Houston came into my head singing "The Children Are Our Future," and and I agree with her. So I think there's something there about some form of proposition that's similar to the Child Trust Fund that we saw about 15 years ago, where you put out some sort of means tested savings account for children, because I think that we need to encourage financial education and awareness from a much younger age. And I think connecting with children through their parents by using something like that, but doing it in a really smart way that helps the children to become connected with it and understand what it's there for, could be something that really means we're investing in our future. So that's where I landed.
I really like that idea. I think child trust funds initially were a really good idea. I think they're slightly tainted at the moment with some of the issues around them, but
Mm.
I think the principle was quite good. And I also think the principle behind what Help to Save was set up to achieve was similar, in focusing on helping people who can't save or trying to get started. I think you're right. It's no good just giving the money. It's also got to be kind of tied into improving the kind of engagement and involvement as well, hasn't it? I don't know what the answer to that is, but I think that would be a great area to focus on.
Yeah, we've talked with people about how we can help connect their children to financial education and to learning. And apps are a really great way to do it. Kids are so used to just picking up a phone or a tablet and logging themselves in and playing games on it. So if you can bring some fun, some element of gamification into saving and start children understanding that actually they can earn pocket money for doing this challenge set by their parents, and that then goes into this savings account and it benefits them. It will benefit them in the long run. It's a really neat way to do it and to start raising that awareness at a very early age.
I agree, and having talked with teenagers and later teens, they all say, "Oh, yeah, wow, it's the sort of stuff I wish I'd learnt at school rather than X, Y, Z," which they didn't enjoy. But it is getting in earlier, isn't it? Because it's harder once it's more established.
Yeah.
That would be a really interesting one. I'd love to think that somebody is beaving away in the Treasury looking at that right now.
Well, maybe I should send them a letter, James.
I definitely think you should. I think the more we can do in the industry to help, the better on that. Let's hope that we do see that as an area of focus fairly soon. Claire, I'm conscious of time. You've been very generous with it today. It's been great to talk to you. It's been a fascinating journey that you and Atom have been on. And thanks for coming on the show and sharing it with us.
Thank you for having me. I've really enjoyed it. You know, it's
Brilliant.
great to talk about some of this stuff, and
Yeah,
hopefully it provokes some thoughts amongst the listeners.
yeah, definitely. And we'll keep a close eye on those announcements, both on the financial side of things and what's new coming on the track. And perhaps we'll get you back at a later point in the future and talk through some of those as well.
Yeah, great. Thank you.
Thanks, Claire.